Welcome everyone to the latest edition of the JMI Wealth monthly video update. Now it's early November as we're filming this. 2024 is rapidly drawing to a close. The fact that the year is closing out though doesn't mean that markets are quieting down. Quite the opposite in fact. In fact, we're entering a fascinating period for not just financial markets but for the world in general. So over the next few minutes we'll try and cover off the key points and market movements. Look, firstly, 2024 is holding a lot of promise as being a very solid year for investment markets and portfolio performances. We don't want to put the commentator's curse on it, but so far this year, share market performance have been solid and falling interest rates have also delivered pleasing returns from fixed interest portfolios. Now, October was a really interesting month for New Zealand investors. While share markets generally gave up a small amount of the gains made this year, there was also a big move in the value of the New Zealand dollar. So returns for New Zealand investors in overseas shares will have been very dependent on whether those holdings were currency hedged or not. So the New Zealand dollar fell almost 6.5% against the US dollar. So while US share markets were a little bit weaker, the New Zealand dollar move would have seen unhedged investors reap gains of 5-6% for the month. Now year to date in US dollars, the benchmark S&P 500 is up 21% to the end of October. And the MSCI World Index has delivered a 17.5% return in US dollar terms. And after really lagging global share markets, the local index has been running hard to catch up. It's still a little way behind, but after what was a very lackluster first 6 months of the year, the NZX 50 index has now gained over 8% so far in 2024. And look, it's still a little bit behind the 11% gain we've seen in the Australian ASX 200 All Ords return, but we're getting there. Now, these weaker returns for US share markets were heavily influenced by a sell-off at the end of the month. In fact, on the very last day of October. And I think it's notable that the end of the month coincided with right the middle of the US third quarter earnings season. And there's been a lot of attention focused on the results of the mega cap companies. I mean, there always are. But on the 31st, the US market turned quite negative on the back of results from Meta, that's the Facebook parent, and Microsoft. And it sort of played into fears coming from the investment community about the sheer volume of spending on AI-related initiatives and developments. Now, this isn't going away. This is going to be an ongoing point of interest. And the market's going to be impatient to see the benefits in profitability from the spending going into the sector. I think for the companies themselves, though, they'll argue that it's still early days in the development and traction of AI-related activity. Look, in general, the earnings season so far is delivering mixed results, and we may see some moderation in forecast earnings growth for the balance of 2024 and 2025. Now, I can't ignore the US election. Now, at the time of recording, we don't know the result. But when you sit and watch this, we may have a result. What we can say, though, at this stage is that the outcome is too close to call. Now, we can't review any month these days without talking about monetary policy. The big picture view is that inflation is generally continuing to moderate around the world, but the trajectory, the rate of change is different everywhere. So we're seeing different central bank responses. So if we consider what's happening locally first, inflation has fallen very rapidly in New Zealand. And annual inflation is now sitting at 2.2%. Very close to the midpoint of the 1 to 3% band. That's the RBNZ's target range. But monetary policy is still, by the central bank's own admission, quite restrictive. But consider this, growth is weak, spending is weak, unemployment is rising, so there are calls for the RBNZ to rapidly reduce the extent of monetary policy restriction, and later this month, it's widely expected the OCR, currently sitting at 4.75, will be reduced by at least 50 basis points. But in the US and in Australia, the situation isn't quite as clear. Inflation is moderating there too, but other indicators like employment are suggesting a softer economic slowdown. And we should also mention that our biggest trading partner, China, they've announced significant economic stimulus measures. Now, given our export exposure to China, this is positive news if the measures do stimulate Chinese domestic demand. Look, as ever, there are lots of moving parts to consider when managing a diversified investment portfolio. In that, asset allocation is almost always the most important decision. we continually monitor and we review those portfolio asset allocation positions, and we factor in recent and expected developments. And currently we are mindful that from a valuation perspective, the US share market in particular is starting to look quite fully valued, so valuations are starting to creep up, and we'll be paying very close attention to the full earnings season picture, that run up to the festive season, any Santa Claus rally, and any signals we get from the US Federal Reserve. We're also conscious of some of these lights shining on the local economic horizon, which is great news, but we also need to be aware of the impact on longer term local interest rates if the New Zealand economy does start to recover and demand returns. But I think that really does look like a 2025 story. So keeping abreast of developments in financial markets, making those ongoing improvements and making adjustments to your investment portfolio, it's not only one of the critical benefits of having an experienced financial advisor in your corner, but it can also help improve your returns. Look, we'd love to help you, maybe your family trust, with ensuring your hard-earned investments are being managed prudently and professionally. So feel free to contact us if you want to talk about your investment experience. You can look us up on jmiwealth.co.nz or on Facebook or on LinkedIn. We'd love to hear from you.